financial phenomenon has captivated investors, financial experts, and the public alike. Once a niche concept, it has become a household name, sparking debates about its role in the future of finance. Its decentralized nature, limited supply, and growing adoption make it a compelling asset, often hailed as a potential game changer in the world of investments. However, the journey of investing in Bitcoin is far from straightforward, blending significant opportunities with substantial risks that demand careful consideration. One of the most persistent misconceptions about Bitcoin is that it's a surefire way to amass quick wealth. The reality is far more complex. Bitcoin's market is notoriously volatile, with prices capable of soaring or plummeting in a matter of hours. This unpredictability can lead to staggering losses, as seen during sudden market crashes or unexpected regulatory shifts. For every story of overnight millionaires, there are countless others of investors caught off guard by sharp declines. The volatility that fuels Bitcoin's allure is a double-edged sword, offering the potential for high returns but also exposing investors to significant financial risk. Beyond volatility, the lack of regulation in the Bitcoin ecosystem poses another challenge. Unlike traditional investments such as stocks or bonds, which operate under established regulatory frameworks, Bitcoin exists in a relatively uncharted territory. This absence of oversight means investors have limited recourse in cases of fraud, dispute, or losses. Additionally, the security of Bitcoin investments remains a concern. Hackers and scammers are constantly probing for vulnerabilities in wallets, exchanges, and other platforms, making cybersecurity a critical consideration for anyone entering this space. High-profile hacks in the past have underscored the importance of robust security measures. Investing in Bitcoin also requires a level of expertise that many newcomers overlook. The market's complexities, ranging from technical aspects like blockchain technology to macroeconomic factors influencing price trends, can be daunting. Diving in without a solid understanding of these dynamics often leads to costly mistakes. Thorough research and due diligence are not just recommended, they are essential for making informed decisions and mitigating risks. Despite these challenges, Bitcoin's potential benefits are hard to ignore. One of its most attractive features is the possibility of substantial returns. Over the years, Bitcoin's value has skyrocketed, turning early adopters into millionaires and drawing the attention of institutional investors. This growth trajectory, while not guaranteed to continue, highlights why many view Bitcoin as a high-reward opportunity. Its decentralized structure, free from government or institutional control, adds to its appeal, particularly for those wary of traditional financial systems. Bitcoin's fixed supply of 21 million coins further enhances its value proposition. Unlike fiat currencies, which can be printed at will, Bitcoin's scarcity makes it a potential hedge against inflation and currency devaluation. This characteristic has led to some comparing it to a digital gold, a store of value in times of economic uncertainty. As central banks around the world grapple with rising inflation, this aspect of Bitcoin has gained increasing attention. Another key advantage in Bitcoin's role is portfolio diversification. By adding an asset that operates independently of traditional markets, investors can reduce their reliance on stocks, bonds, or real estate, potentially lowering overall risk. Bitcoin's low correlation with conventional assets makes it an appealing option for those looking to spread their investments across different classes. Moreover, its growing acceptance, evidenced by major companies like Tesla and PayPal integrating it into their operations, signals a maturing market with expanding use cases. Looking ahead, Bitcoin's future appears promising yet uncertain. Increasing institutional adoption, from hedge funds to publicly traded companies, is lending it legitimacy and driving mainstream acceptance. Regulatory developments, however, will play a critical role. While some countries are embracing Bitcoin, others are imposing restrictions, creating a patchwork of rules that investors must navigate. Staying informed about these changes, as well as technological advancements and market trends, is crucial for anyone looking to capitalize on Bitcoin's potential. Investing in Bitcoin is a multifaceted endeavor, offering the allure of high returns and diversification, but tempered by significant risks like volatility, regulatory uncertainty, and security concerns. Success requires a clear-eyed approach, grounded in research and a willingness to adapt to a rapidly evolving market. As Bitcoin continues to carve out its place in the financial world, it remains a polarizing yet undeniable force, one that demands both caution and curiosity from those who choose to engage with it.